what's going on, guys? So obviously Bitcoin hit a high of $108,000 USD per Bitcoin and has now broken below $100,000 again and is sitting at approximately $95,000 USD per Bitcoin. So in this video, I'm going to talk about, is it time to dollar cost average into Bitcoin now that the price is sub $100,000? I'm going to make this video super short and sweet, and I'm going to show you guys my DCA ratios I like to use on Bitcoin so you can hopefully use this strategy as well. Alright, so let's start with basically the blue line above is my DCA ratio. The orange line is obviously the price of Bitcoin. And then below is the Tabby model from Answer Invest. So my DCA ratio is a very simple ratio between Bitcoin divided by the VIX. So you can easily copy my chart on TradingView if you want to, which I highly recommend because as you guys can see, if you had bought every time this dollar cost averaging ratio triggered a buy signal on Bitcoin, you would have had a really good average for the past 2 years and you would have made a lot of money holding Bitcoin. And at the moment, the ratio has now finally triggered a buy signal for the first time since this entire rally that we had for the past 2 months. So basically we had zero signal until yesterday. So the way it works is very simple. I just use standard deviation on that specific ratio on shorter time frames and on bigger time frames. And right now on the daily time frame, every time it basically hits the second or the third standard deviation, it then triggers a buy signal. Basically meaning that the price should eventually revert back to the means of the probabilities of the price action. And now I just wanted to also show the same ratio that you can use on the weekly time frame, which is the second time frame I like to use on this DCA ratio. And as you guys can see, before we had this correction in the price of Bitcoin, we were really high in the probabilities on the weekly time frame. We were basically at a 2.5 standard deviation. So obviously that's not a place you want to be chasing if you want to optimize your entry. If you don't really care, because Bitcoin most likely will go to $150,000 next year, well, you can just skip the video, right? That's probably not the right video for you. But personally, this is just something I like to use. So hopefully it kind of helps you guys invest in a smarter way. The only weakness that this DCA ratio has is it's not as accurate as the second one I'm about to show you guys. That is way more accurate to really time the bottom if you're into that type of stuff. If you don't care, that's totally fine. But now, for the ones that are curious, I'm going to show you guys my second ratio I like using, which is basically Bitcoin devised by the US M2 money supply. And as you guys can see, I still use the same type of logic. So I will use the standard deviation range on the price action. But now I will combine that with the breadth of this ratio. So I will have the 10-day breadth, the 20-day breadth, and the 50-day breadth. And this one, as you can see if I zoom out, gives really good entries, especially when using the 50-day breadth as an indicator of an actual bottom. And at the moment, well, we're not there yet, guys, on the 50-day breadth. So this could mean that we could still technically have a little bit more downside in the next coming weeks. Hopefully we don't. December seasonally tends to be bullish, but when everyone is on the same side of the boat, that's when the market does the complete opposite. So at the moment, this ratio is not signaling a buy signal yet. So if you're a little bit more conservative, maybe wait a little bit and copy my chart on your own TradingView. It's a really good way to know when to actually buy at the actual bottom. As you guys can see, if you bought every time we got a signal on the 50-day breadth combined with the smaller breadths, you would have probably had an average in that ballpark approximately. And if we measured that level to the top of Bitcoin, you would have had almost doubled your money in less than 2 years, which is incredible in itself. So hopefully this ratio helps you time the market a little bit better so you can make more money. And then I just wanted to finish with the actual probabilities of the price action of the Bitcoin chart. And I still have my levels here, guys, that have not been triggered to the downside, which is 91,000 USD to 92,000 USD for me to put some bullish trades on crypto. We did touch the second standard deviation of the daily range, and that was kind of my target with the 50 moving average as well, which is the pale blue line beneath. I would still like to see, like, one last big flush to flush everyone, especially there's a lot of longs at 90,000 USD that we could flush. That's a big support, but then we will most likely have a nice beautiful wick and then start going back up. And then I just wanted to point out that at the moment, based on probabilities, the target, which is always the means, is about 7% to the upside, and that the second standard deviation, if we do revisit that level, is about 4% lower than where we are currently. But the market structure is still intact. We're extremely bullish, so hopefully you haven't been shaken out. All right, so that's pretty much it, guys. And now I just wanted to talk about Ethereum and Solana and give you guys an update of what I think is going on. So for Ethereum, honestly, in my humble opinion, I think that right now we're creating a reverse head and shoulder, which is a bullish pattern to the upside. So we'll most likely go sideways for a little while until we break that top line right here to then, go in these upper ranges. But I would be very careful with Ethereum. I still don't like Ethereum. You guys know, if you've been listening to this channel, I'm not going to go in detail about how horrible the actual blockchain and the actual technology is, because at the end of the day, that's important, right? Everyone just wants to make money in crypto, but they don't want to try the actual technology behind the coins, right? At the end of the day, it's kind of like if you want to enter a physical casino, right? Because you want to play at the poker table. Well, you need the chips of the casino. But if the casino itself sucks, well, there's just less monkeys that want the chips of that casino. Therefore, the price just doesn't go really high. It's that simple. That's how crypto works fundamentally, in my humble opinion. And that's why I am extremely bullish on Solana, because I believe it is the #1 casino in the cryptocurrency world. And talking about Solana, I just wanted to give a quick update. So right now we are at a very good support. I'm very happy. If you guys recall, I told you guys to be careful with Solana in my last videos, and that I would have liked to see Solana go down into the US ATF, exchange traded fund, being listed in the US stock market for Solana. So I'm kind of happy to see this. Obviously my PNL has lost a lot of gains, but that's okay, because that was kind of my game plan. So I'm hoping that we kind of stay in that range below $200 is a gift, guys. Especially if then we can just buy the US ATF in January. That's going to be crazy. And the amount of money to be made after that catalyst is going to be crazy. That's really when, Solana most likely will then go to 420. Which would bring the market cap of Solana to about $200 billion, which makes a lot of sense. And afterwards, we'll see, right, if we do hit my crazy levels of $900 to $1,000. And so, yeah, I just wanted to show you guys this. So hopefully Solana kind of stays in this suppressed range until we get the US ATF. All right, that's it, guys. I apologize if it was longer than it should have been. Hopefully you get to copy my charts I just showed you, so you can learn how to properly dollar cost average into Bitcoin. God bless you guys. If you're on my YouTube channel, it's because Jesus wants you to make a lot of money. So take advantage of that. Be grateful. See you in the next video.